network effects that crypto can create cannot be matched by any other investable asset class.
All of a sudden, 3, 4, 5 different technologies come together to create use cases that are true game changers for the consumer in terms of value creation.
The crypto space is a rapidly expanding sector and growing into a sizable asset class in its own right. It's creating a new ecosystem that revolutionizes traditional finance in a way that the internet revolutionized the way we went shopping and connecting with each other. And this is going to provide for some stunning opportunities for growth.
The digital asset space started with Bitcoin, but has now expanded into many different assets, such as DeFi, NFTs, gaming NFTs, the metaverse, and all kinds of other applications of blockchain tech.
This is a very exciting time in crypto with things like the emergence of decentralized finance or DeFi, where you have small teams building protocols that will constitute the rails for applications that will be built upon them. One of the instances would be Compound, which is a small team of 16 developers, which has created a protocol which today is used for the borrowing, lending of $20 billion in crypto assets. And the power of that is that you can recreate the functions that are typically performed by a bank, but in a sort of a staffless fashion. So think of it as a self-driving bank, where a piece of code called a smart contract embeds all the terms of the lending and the borrowing, and the protocol creates a pool of crypto assets to be lent and manages the interactions between lenders and borrowers. And all in a fully automated fashion.
The market cap of the asset class is now over 2 trillion. It's now becoming a legitimate investable asset class for all entities pretty much.
What's likely to happen is that applications will be built upon these protocols, much in the same way as the internet in 1994, where the protocols were put in place, which eventually led the way to the emergence of the Googles, the Facebooks, the Amazons.
There's a lot of buzzwords within the crypto space, with the proliferation of non-fungible tokens helping to upend concepts within art and also redrawing the rules for intellectual property. But there are also some major advances taking place for consumers, and this is starting to attract a much wider investor base.
If you look at the industry, Andreessen Horowitz recently launched their third crypto fund, 2.2 billion, which is almost squarely aimed at the DeFi ecosystem. You have a lot of investment going on in areas like NFTs, which can be used to, append memorabilia and digital art, but also can be used in other instances. For example, a charity may get an artist to donate a piece of art. They make 10,000 numbered copies, and they give them to their donors as a way to kind of reward their contribution and their patronage. There are so many ways in which these new tools can be leveraged to create value.
Also, NFTs have been blowing up, and they kind of revolutionize not only the art space. Like, a lot of people have been focusing on NFTs for art, but the most interesting things for me in NFTs is actually gaming. It's very interesting to be able to own a game item, right? You actually can earn money from your game items. You can actually play to earn money from a game. You can invest not in the studio that makes the game, but the game itself.
In terms of the consumer, there's been also an evolution. In the early days, you had sort of the early adopters, kind of the younger, more technologically aware investors that bought Bitcoin at cents or a few dollars a unit. But today, what you have is kind of the emergence of more mainstream investors, a slightly older demographic, people that are more affluent, and that they have a greater concern for things like security, regulatory compliance, in-language support. And this new investor may not be as aware of the technology and may not be want to deal with managing keys and stuff. So they have a different set of requirements, but that's what's kind of fueling the mainstream interest. And you see that from, let's say, 2018 onwards, a lot of mainstream companies have moved into the crypto space, whether it's Square, Cash App, or Robinhood, and many others. And there is a reason for that, and the interest out there, call it FOMO, fear of missing out.
Investment opportunities continue to proliferate across this sector, especially now that there's a regulatory framework being developed. The combination of that regulation and an institutionally compatible infrastructure will help to push toward mass adoption, where traditional finance starts to merge with these new technologies.
The network effects that crypto can create cannot be matched by any other asset class, any other investable asset class.
In the first 10 years or so of crypto, it was just the crypto native companies, the Coinbases, Bitstamps, Gemini, Kraken, etc. And around 2018, you've had this massive influx of non-crypto native companies stepping in. So it's a combination of the nature of the market changing, the market also weeding out the bad actors, the bad players, and the renewed emphasis on regulatory controls, on security, and along that, I think there will be an evolution of the regulatory framework. Point in case, the state of Wyoming recently passed a new law that enables a decentralized autonomous organization to essentially incorporate in the state of Wyoming. And that's kind of a bit of a turning point, because you've got a company that has no shareholders, no board of directors, no CEO, which is essentially governed by the tokens. So the token holders kind of vote on governance. And the only requirement by the state of Wyoming is that there be one officer in case that decentralized autonomous organization gets a lawsuit. But it's kind of a sign of things to come.
Well, there's a couple of ways to invest in this space. One way is, a more traditional way, which is to invest in a company that has exposure to this space. The other and more direct way is actually to invest in the digital assets themselves. And I would encourage people to actually explore that further, because it is the way that will provide the outsized return that the space can offer, right?
Regulation and institutional infrastructure are driving decentralized finance into the mainstream. This also requires security that meets those institutional requirements. And Paysafe have been merging their traditional expertise with the developments in new technologies to provide products that are appropriate for a mass market.
Paysafe is a leading payments platform. We've been in business for 25 years and are trusted by millions of consumers and merchants. We both offer services to consumers, including the digital wallets Skrill and NetTeller, and the eCash products Paysafe Card and Paysafe Cash, and as well as serving about 250,000 merchants globally.
We're regulated across the world, right? We're regulated in the US with FinCEN. We're regulated by the FCA in the UK. We are regulated and registered with the Irish regulator, the CBI. So we're trying to kind of make this as safe and compliant as possible. And that allows people to feel secure. It allows people to transact with crypto without worrying that something can happen, that something that the regulation can come down on them, or they won't be able to cash out or something like that. It really demystifies the entire experience.
We were one of the pioneers in the adoption of crypto. We started actually accepting Bitcoin in our wallets, NetTeller at the time, in March 2015. So we have quite a bit of experience in terms of deploying crypto services at scale. We carry a lot of expertise when it comes to dealing with consumers and earning their trust.
From our two digital wallets, Skrill and NetTeller, you can withdraw your funds to a bank, you can withdraw your funds to a local payment option, you can withdraw your funds to a card. And we have our own card that allows you to essentially spend your balance online or at merchants. So essentially it provides the freedom and the security in a one single kind of environment to be able to interact with crypto, use it, spend it, and so on and so forth.
On the consumer side, we support 37 different cryptocurrencies. People can use 40 fiat currencies. We're live in 90 plus countries, so we're pretty much a global offering, enabling for the buying, the holding, and the selling of cryptocurrencies. On the merchant front, we also are a trusted supplier of fiat on-ramps. So we work with some of the world's largest crypto exchanges in terms of enabling consumers to purchase crypto by the use of fiat currency.
We're rolling out something very interesting in our digital wallets, which is essentially what we call crypto bonus, right? And we try to roll it out in as many countries as possible. It allows people to have beneficial interest in a selected cryptocurrency up to a certain amount for free. And they can claim the profit from that in a certain period of time.
The transition towards a digital ecosystem is accelerating today, assisted by institutional pools of capital, which are increasingly chasing the opportunities that are arising from more and more applications being built onto the blockchain.
Adoption in cryptocurrency is actually mostly a function of time, right? We're seeing the constant growth in entities, that are interested in the space. We're seeing the constant growth that are transacting on chain. For example, with Bitcoin, the active wallet addresses and Ethereum as well have been blowing up, for years. It's not just something that happened in the past couple of months.
As the investment keeps growing in terms of funding these projects that create the protocols or the rails, we're going to see not only new protocols be put in place in areas like lending, borrowing, like decentralized exchanges and stable coins. And those protocols are going to be used by companies to build applications on top of them. So I think Paysafe would be a great candidate to leverage that full DeFi ecosystem and build value-added applications on top of the protocols that are being put in place. Regulation will kind of step up, and there will be more developments in terms of establishing sort of the parameters in different geographies as to how crypto needs to evolve. In terms of our own involvement in the crypto industry, I see ourselves adding more cryptocurrencies, more functionality, more countries in terms of coverage, and as I said before, building applications on top of the protocols that are being put in place.
We have users that don't necessarily care about the underlying tech, they want just to benefit from it. For example, artists that are issuing NFTs, or for example, gamers that are playing all these play-to-earn games. They just want to use the function and the kind of new horizons that blockchain tech allows without having to deal with the underlying tech and without caring even which blockchain they use, as long as it works and as long as it's easy to use.
The speed and security of payments is an essential component of the crypto ecosystem. This ecosystem is creating value for both merchants and customers, for companies and individuals along the whole of the value chain. It's creating efficiencies for the benefit of everyone. Paysafe has been at the centre of the shift towards a digital economy and is now pioneering the drive towards fast, safe, and regulated payment systems within this expanding world of decentralized finance.
What's great about cryptocurrency is that it cuts out the middleman. It makes finance more efficient.
I love the concept of turning technology into value for both consumers and merchants. I see the crypto environment as a way to create a massive amount of value.